Hi everyone, this is Liam McMahon. I'm a currency strategist over at globalfxclub.com, and I am here today to talk to you guys a little bit about the daily chart of dollar yen and some of the limitations of everyone's favorite indicator, the Relative Strength Index, or RSI. It is Monday, March 11th for your reference, and please take a moment to pause the recording, read our risk disclaimer, and then we'll start looking at the chart. Alright, so here we have the daily chart of dollar yen. You can see here at the beginning of last week, we gapped higher to start the week, then sold off really hard, down reaching as low as about 90.84 before finishing the week almost unchanged. Since then, we have continued higher, popping above the key resistance at 95 and are currently trading around 96.11. In terms of technicals here, I have the 200, 100, 50 period EMAs and a relative strength index with an overbought and oversold settings at 30 and 70. Some people choose to use 20 and 80 for their overbought oversold settings, which help filter out some of the false positives that you can get. But either way, dollar yen has sort of defied the RSI index of late. I want to talk a little bit about how that is. So back here in on December 11th, it looks like we broke above 70 on the RSI. We were currently trading then at 82.26. And so if you look to start getting short based on that overbought reading, you paid for it dearly as we rallied, stayed in overbought territory until here where we were trading around 88.40. So a significant run higher. Even here, when we were down in 88.40 and we dipped out of overbought territory, price did not really decline overly much before taking another serious leg higher. So that's one way that dollar yen has made a fool of the RSI of late. The other way is by sort of what's the word I'm looking for? Ignoring the RSI divergence that is a popular part of a lot of traders' strategies. So you can see here as we began our RSI decline on the 4th of January of this year, so right about here, price continued higher while the RSI continued lower. Alright, so that's RSI divergence. Price was making new highs and new lows while the RSI headed lower. So we had significant RSI divergence, so a lot of people would be looking for sell signals around here as we started to round. But instead what we got was another 2, 3, 400 pip pop higher. That is worth noting because as we're currently looking at this, there is another more significant example of RSI divergence currently ongoing. So we can see here RSI heading lower, starting on that January 4th peak until the present, where price has moved significantly higher during that same time period. So we have some significant RSI divergence. Now we just looked at an example of how the RSI divergence didn't pan out, so what kind of credence do we want to give this current level of divergence? The answer is some, but not that much. And what I mean by that is I wouldn't be looking to sell dollar yen here at 96.11. Your really only play would be to sell at 96.11, put your stops above the recent highs, so 96.70 would be your stops. So a 70-point stop, and then you'd be pretty much just hoping that we would move lower based solely on the RSI. The trend in dollar yen is clearly up. I don't like just fading these new highs based only on some RSI divergence and the fact that we've just re-entered overbought territory, because as we've seen in the past, dollar yen is ignoring all of those things. So rather, I would be choosing not to buy here because of that divergence, and I would be looking for a pullback in the hopes that these overbought technical indicators are going to herald a move lower in the coming days. A move back down towards 94.45 to 94.75 or so, so about 100 pips lower, 110, 120 pips lower, would be the first level of support for this pair as we enter this previous high just shy of 95 where we gapped higher, and this other previous high that doesn't sort of include the gap. So that range would be our first opportunity to consider dollar-yen longs. Below that, we become sort of a wait-and-see game. Since the rally has started back in November of 2012, you can see price has not even managed to come back far enough to test this 50-day EMA. So any moves down to and including this 50-day EMA should be viewed as buying opportunities. Only a daily close below this 50-period EMA really starts to raise questions about whether or not a more significant correction may be in line, maybe down to as low as 85. So our first level, again, shorter term, has to be these two previous highs. Any sort of reaction off these levels suggests another move higher. A close below those levels could expose slightly lower prices down to these lows around 90.80 where aggressive bids came in on the 25th or so of February, which has sparked this move higher. That would be the next level to keep an eye on as well. Always sort of be aware for the possibility of head and shoulders tops on this sort of rally. Again, we have not even completed a head yet, but just something to keep in mind. This is a possibility. This would be a more appealing technical setup to start to short if indeed we could get something like this where we move lower, complete the head, chop sideways around 92.50 to put in a right shoulder before a significant move lower down to 87.50 or 85 where significant daily moving average support sits. So, in summary, I would warn you against selling just because the RSI says you should sell. And I would rather look for now, buying opportunities on a move down to 94.50. Unless we, crash below 94.50, put in a head and shoulders type topping pattern, the bias always has to be to the long side on this sort of rally. So keep your eyes on dollar-yen going forward. The new aggressive Japanese easing campaign is set to begin sometime in the next month and a half. So you want to keep an eye on the reactions from all yen pairs on that, whether it'll be buy the rumor, sell the news, or whether it'll be buy the rumor and buy the news even harder. We'll find out soon. So hopefully this is helpful. As always, if you have any questions, head on over to globalfxclub.com. We'll be happy to talk to you there. I wish you the best of luck this trading week, and I will talk to you soon.